presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom. How you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right, and you may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials down 228. You get the NASDAQ off 80. S&P's off 29. Gold contract down $14.90, trading at $2,165 an ounce. We have silver off 13 cents, $25.02 an ounce. Light sweet crude up $1.48. $81.20 a barrel. Notes and bonds. 10-year note down 23 ticks, 110.07. The 30-year full point and a half at 118.24. And King dollar. King dollar's up 583 ticks, trading 103.371. Euro at 108. Yen at 148. British pound at 127 to 1 U.S. dollar. Let's get over to our S&P futures here for a second because I want to show you something here. There's no conviction. ESA. Let's see. There we go. Okay. So I'm going to bring this future up. I want to show you. There's no conviction inside the futures. We're down 32. But the bottom line is that there's just not a conviction up or down here, which is really wild, man. What I mean by that, take a look at this. So you can see this morning when we did come down, this level here, let's see. So we're down 32, but the level at it's 97, at 52.03. That was the last time that we had any volume here. Right there. Let me put this back a bit. So we bounce, we come back down, and you can see when the first time we come back down, not this level here, bottom line, you still didn't have volume. Now this is the biggest volume bar that we have thus far. Now let me do this. I'm going to bring this back. Okay, so let's see. We got this way. Yeah, this is interesting when I look at it this way. 1 second. Okay, so you're off 35. There she is right there. I knew I'd find this baby. See, they were always going after high volume lows, folks, okay? And here we are. There it is. 1 second. So we're coming into Mondays. That's what's happening right here, right now. So what hasn't been tested, remember this? That what hasn't been tested, this is where we're going, man. That low of Monday is game. That high volume low wasn't tested, and then we got the second one coming in, and it didn't break it, but it was still big volume. So it's, what is that number? Oh, my God. It's a little bit lower than we are right now. I can't believe we're going to move these monitors out. And Jacob, I got it because I can't see that far. Anyway, 1 second. I got to find this thing. But just bear with me 1 second, folks. I'm going to get this thing. ESA. We need that number. And it's right in front of me, but guess what? I'm going to do it on this side. I'll be able to see it better. Okay. It's right there. Okay. 52. Sorry, folks. Jesus, I can't believe I can't do that. Unbelievable. Anyway, I'll get this number for you at the break. But it's not done yet. That's my point more than anything. This level here, what is this level? There's lower prices here. That's the bottom line. And if we take a look at the NQs, put this back to Monday. I suspect this is going to be the same deal. This is going to go back to the Monday. Yeah, it is. You can see this. The Monday lows, folks, is that what we're going after. They just haven't been tested. So you can see this last leg down on the NQs. The volume's contracting. So we got plenty of time to go down and test that and then do another bounce. So if you are trading the futures, keep your eye on that, man, because that is definitely game out here. We go into the gold market. We take a look at gold. Gold's pulling back, light volume, though. Gold continues to want higher price. We got down to 21.57. It rejected that. We're at 21.66 right now. You get approximately 2 million, 1.9 million contracts. That 1.9 million is going against 3 million. Now here, though, the 10-year note. Now this is coming against 3 million contracts also, but this is going to the bottom of this consolidation. And we'll see how this shakes out. This is a big move out here today in the 10-year, there's no doubt. Down 22 ticks. Get 2 million contracts traded. We put this up. I believe we'd come off the bottom with 3, but you're not holding price at all. Yeah, there it is right there. What is it? Yeah, it's 3 million contracts versus 2. But you get a whole price. So we're coming into, you're coming into Friday, and that bottom is open. Excuse me, folks. We go into the silver market. Now, silver had a big day yesterday, as did copper and oil. And silver's holding nice. Got to a higher high today, 69,000 contracts. Not bad. You know, we did a lot more than that yesterday. It's grinding into its downdraft. And that takes a bit. There's no two ways about it, because that came down fast and furious 3 months ago. It had wide price spread. You had big volume on the way down. So as you start moving to higher price, it's going to take some bit to get through this big bar. There's no two ways about that. We go take a look at the oil, CLA. So oil out here right now, you got 262,000 contracts. You just broke a swing. Let's see what we have here. Well, you didn't break it with volume, but you get higher price happen. Stay right there, folks. Come right back. We have the Dow. The Dow Industrials right now trading down 280. Nasdaq's off 117. S&P's off 37. We're coming right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 261, Nasdaq's up 108, S&P's are down 33. Let's go inside the Dow Industrials and take a look at the winners versus the losers out here. So you have, Microsoft broke out today, by the way. We'll go back to that in a second. You got Microsoft putting 57 positive points in, Amgen 12, taken away from it. You get Goldman minus 38, Home Depot minus 38. Let's go over to Microsoft for a second. So, yep, you're gonna break topside here, man. Okay, so you're up $9. This is gonna be a oh my God, it's gonna be an ABC up on a weekly. Look at this. Yep, this thing's going a lot higher, folks. Unbelievable. It's going to be easy to take this out on the weekly. Right now, yeah, and it's a... Okay, we're moving these monitors. I apologize, folks. What's happening is that I'm totally blind in my left eye now. That took a while to happen, but my right eye, I'm having a hard time seeing these monitors really with one eye. Oh, man, this took a long time. Anyway, it's here. So I got to get those monitors definitely closer. There's no two ways about that. And if we take a look at where we stand volume-wise out here, so 540 right now on the NYSE, and we got 4.1. So it's going to be light volume out here, man. Let's get over to our man, Mr. Tim Wood, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ORD, O-R-D, Oracle, O-R-C-L-E.com. That's ORD-Oracle.com. Tim Wood, what's going on, brother?
Well, I was hoping for a little bit stronger week than what we had. I sent out a notice here probably 10, 15 minutes ago. I'm getting out of my long position.
Yeah, okay.
So we kind of look at it. Let's go to chart one.
Okay, yeah. Let's see. Let's get this up. Give me 1 second here. There we go. Okay. Okay, I have it.
All right. Well, anyhow, we covered this before. We actually talked about it on your show, and it's a pretty simple method. It seems to work pretty well. The chart goes back to mid-2016. And the middle window there is the monthly SPX.
Okay.
And I use a candlestick pattern. And every time the monthly closed above, the monthly candle closed 50% above the upper Bollinger Band, normally you get a consolidation. And we did that actually in February, so I got that dark circle around it.
I see.
And so that kind of suggested March, may not be a banner month. And nothing real bearish. Sometimes you get decent declines on it. A lot of times you get kind of a sideways move the next month. So I'm thinking this month is going to be more of a sideways move, not a top of any consequence. But, some probably pullback next week. Matter of fact, seasonality-wise, is the 9th weakest week of the year. And actually this week is the 8th strongest week of the year.
Okay.
And this week is not strong. So maybe it's going to put more oomph to the downside next week. I don't know. I'll have to wait and see. And the second window up from the bottom is the SPX VIX ratio. It's a monthly chart. And it's got a little divergence there. The tan areas I pointed out where the SP's made higher highs, this ratio made lower highs.
Okay.
And last month we also made a lower high. So nothing significant, maybe just kind of a minor pullback for a month, month of March, and build some energy where another builds energy where the trend gets back up to, the 10-day up to 1.2 or something like that. But I don't see any top of any consequence. But
we've been actually, it was wild, Tim. We've been trading in the same place for about 3 weeks now.
Yeah. So we're probably kind of just stay here. And also the monthly, we're halfway over, and maybe the market's just due for a rest here, a mild consolidation. So let's flip the chart too.
Okay.
Real quick.
Yeah.
This is kind of the chart when I made this chart. Anyhow, the top window is the 10-day, which is 2-week RSI for the SPX ratio, which is the next window down.
Right.
And so it measures the bond market against the equity market. And so if these two markets move opposite to each other in a strong way, it needs to rebalance is how I come up with it. And it seems to work pretty well. We hit about 68, 69 today, and we started backing off. And so it kind of gave me a cue that this probably rally is not going to continue. So, but anyhow, when the RSI of this ratio gets up around 70 and higher, normally, which is the third window down, which is the daily SPX, normally you get some sort of a consolidation. Not a big one. Sometimes you do, sometimes you don't. But usually you get a consolidation that could last a week or two. So I was thinking that's probably what we're saying here. We got a couple of them, end of February, it only lasts a couple of days, and now we're kind of getting another one. So I think next week's probably going to be a down week and kind of matches that, the 9th weakest week of the year seasonality-wise.
Yeah, and it seems like this ratio is almost like an early warning signal, right? Which is like, I kind of dig this. Yeah, right.
Yeah, so it gets up there, so you can pay attention to it, and a lot of times they're just minor consolidations. All the blue marks on the SPX chart I got there,
yes,
shows what happens. A lot of times they're just kind of a timeout in a weekly chart, or 3, 4, 5 days. It kind of consolidates. The bottom signals work pretty well too. Matter of fact, this gave a bullish signal back in December. Which is circled in reds. That's when the RSI gets down below around 30.
Yeah.
The market was going up, and it wasn't a double top because this ratio was banging around the 30 range. So that was kind of a bullish situation, and it turned out to be correct. And it picked out some other lows in, looks like about March of 2023, it picked up that low. And so it's kind of an early warning sign. So, and we're down today. So I'm hoping it stays above my open price. I got long, but nothing real. It's just gobbledygook in here. So
well, and it seems that I know because
real bearish.
The volume's going to be light today. That's what it looks like anyway. Unless they come in with a huge amount of volume at the close, which we know they can. But right now, this volume's not that big, particularly going against Monday. Do you know what I mean? If we just look at keep it tight going against Monday, it's going to be lighter than Monday, so pretty wild.
Yeah, but we're going to be a little bit higher than yesterday because we already are.
Yeah.
So
we're going to be higher than yesterday. Here, just stay right there, Tim. Tim Wood, Tom O'Brien. We're going to be coming right back, folks. We're bisecting and dissecting this market. We have the Dow down 306, NASDAQ off 126, S&P's down 40. Tim and I are coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Tim Wood, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow. The Dow is off 280. You get the NASDAQ off 116. S&Ps are off 37. We're talking with our man, Mr. Tim Wood, and we're looking at some charts right now. Okay, Tim, we're ready.
All right, let's go to chart 3.
Okay.
Yeah, here's what I thought was going to happen. And again, I sent out a brief report selling my position probably about a half hour ago. But anyhow, back on, I don't know, I had it circled in volume there on the chart.
I see it, yep. 5 days ago.
If you go up, yeah, that's a high volume day. a lot of times those high volume days are tested. I thought we'd at least get back to a high volume day, and we never did touch it. So that was my scenario. And the reason why I did go long, we had, on that day, we had a trend close of 1.21. The day before, we had a close of 1.15. The day before that, we had 260 downtick reading. And, it's kind of gobbledygook, but, it kind of leaned bullish. So I know the downtrend wasn't going to do much, so they're going to try to rally it. And I thought they'd get back to that high. And, I guess they could do it tomorrow and maybe not. But that was my upside objective. And the thing kind of just started falling apart today, so I just getting out and say, heck with it. I'll look on the next trade.
I'm with you.
But here, let's just go to the gold issues. There's quite a bit of stuff going on here.
Okay. Hey, Tim, so listen to this. And, folks, listen to this. It's kind of cool what's been happening in gold. And, we know from history we haven't got a lot of gold calls here, thank God. Because when all the gold calls come in, that's when the turn comes. But check this out, Tim. Yesterday, and if you haven't seen this yet, today's Wednesday, right? Yeah. Yesterday, in the front page of the Wall Street Journal, folks, was gold. Now, I don't think I've ever seen, I might have seen it in the front page of the Wall Street Journal, Tim, but not like it was yesterday. And I'm saying to myself now, this is pretty cool because I don't see a lot of excitement around the gold market, but yet between Bloomberg has done a couple stories. The Wall Street Journal has done a story, right in the front page. And what they're all talking about, folks, is that the aspect of, which is kind of, so check this out, Tim. This is kind of weird, actually. That the gold ETFs, right, they've been losing market cap, meaning that people have been selling the gold ETFs, okay? That being said, physical gold, the central banks have been buying hand over fist. You're talking about double and triple what they normally buy. So when I saw this, I says, man, this is kind of interesting. And where I went, Tim? I went, that chart that you showed us that when you go from minus 300 and then over up 1,000 or whatever, and that's the middle of the run. When I saw this, I says,
18-day average, I think, up down volume.
Yes,
whatever that was.
Yes. And then when I saw this, I says, you know what, man? This is amazing. Normally when you see that, folks, that's the end of the market. Well, I don't even think the market started. So it was kind of cool, man. Do you know what I mean? It's like, okay, we got an article on gold. Maybe some more people will start kicking in. We'll see. But
yeah, let's see. But
let's go over these shots.
Chart 4 real quick. Yep. Yeah, that's an interesting story. They're selling the ETFs, but they're buying the physical gold.
Yes.
So, yeah, that's a little strange.
I know.
But this is a chart, in my opinion, that dictates the bull and bear market of GDX, the gold stocks.
Yes.
So, if we can get this thing in an uptrend, it can last a couple, 3 years. But anyhow, in a nutshell, this chart goes back to 2008 or thereabouts. And all it is, the bottom window is the cumulative advanced decline monthly chart with the Bollinger Band on it.
Okay.
And the top window is the cumulative up-down volume for GDX, the up-down volume for GDX cumulative, and it's a monthly chart. And this doesn't try to get the low or the high. What it does is get the 80% in between.
Yes.
So in my opinion, I think the bottom is actually in of October of 2022, and I can show you the charts why, but we don't really have the time for that. But I may do that, maybe the next show or something.
Yeah.
But anyhow,
Okay. Yep.
Having said that, but anyhow, this chart gave a sell signal, looks like about January 2021, as both those indicators, the top indicator and the bottom indicator, fell below the mid-Bollinger Band. And it's still below the mid-Bollinger Bands we're talking. So that chart gave a sell signal, 3 years ago. And it's still on a sell signal. So even though there have been some rallies in the gold stock, the whole market's actually been pretty weak because it actually measures the up volume and down volume, and it also measures the advance and decline.
Right.
So since 2021, the advance decline for GDX has actually been in a downtrend. so there have been short-term pops, but there's never been any follow-through to the upside, at least not yet. And so once this gets above the mid-Bollinger Band, then that'll be the time when most stocks, gold stocks, no matter what they are, will start responding. And so, a lot of these stocks, even though the market takes them is higher now than it was back October, most gold stocks are actually below the October lows.
Yes, they
according to this chart. Yeah. So it's real misery, right? So misery's good because it's kind of like the phoenix coming out of the ashes,
right?
And so we're kind of into that stage. Are this indicator on a bicycle yet? No, it's not. But let's go to chart number 5.
Hey, let me ask you something first. I just figured out what you're doing here, man. This is kind of cool. Meaning on this ratio. I was following you along what you're doing, but I'm just realizing. So what did you do? You took the formula from the arms, right? And then you're doing it with the ratio with the GDX, right? Because up-down volume, right?
Well, yes, it's advanced decline.
Yeah.
Right, the Bollinger Band, and also the up-down volume is cumulative, though.
I like it. No, okay, I see a cumulative, though. Okay, cool, man. I like it.
Yeah, so it...
I'm just trying to figure out how you get all these...
It measures the strength in the GDX market.
Yes.
Because it takes in advanced decline.
Yep.
It takes in up-down volume. That's pretty much all that's what GDX is.
No, I know, man. I'm digging it. Okay, cool.
Yeah, so it really gives a great picture. It gave a sell signal back in late 2011 and remained on a sell signal all the way into 2016.
Right.
You see that?
We want that buy signal.
And,
No, I can see it. So, I like that ratio, man. That's really, yeah.
Yeah, it works pretty good. We got another.
Yeah, just stay right there, folks. Tim and I are going to be coming back. We're talking gold out here. Dow right now down 310. Nasdaq's off 122. S&Ps are off 39. Stay right there. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the Newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors. This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow down 275, Nasdaq's off 100, S&Ps are off 33. We're talking gold right now with our man, Mr. Tim O'Brien. Go ahead, Tim.
All right. Let's go to chart 5.
Okay.
So we kind of look at the bigger picture. The bigger picture is still a cumulative advanced decline for GDX and up-down volume cumulative are still in a downtrend. So let's go. So now this chart, the middle window is a weekly XAU gold ratio.
Okay.
And so this gives, it gives more signals and stuff. And the last signal that occurred, we got one here just recently, because this chart is a weekly chart, but the important signal I think it came in 2022, July, September of that pointed out. That's when the RSI of the weekly ratio gets below 30. Then all those blue lines across there is when those signals were occurred.
Yes,
and it comes out pretty accurate. So
I know, man.
This is So when the weekly XAU gold ratio goes through the floor, actually it's bullish.
Right.
But you got to wait till the RSI gets down below 30, then it turns up. Then that's the signal. And we just had one here in mid-February, I think it was, or something. But anyhow, we just got a buy signal, and it's starting to go up. What I want to talk about is the weekly XAU ratio, or weekly XAU bottom window.
Okay.
You got a trend line connecting the highs going back to 2000.
I see that.
Yeah. So that looks like a head and shoulders. And to get through that trend line, you're going to need a sign of strength. So now if you do get the sign of strength, that means there's a lot of energy going into the XAU. And if you go back to chart number 4.
Okay.
If you do that, the window of the monthly GDX chart,
yes,
which is the middle window.
Yeah.
So that's the same line there, but it's on the monthly chart.
Oh, I see. I got it. Yep, I get it.
Through this trend line.
It's right where the arrow is. That's what we're looking for, folks, to cut that trend line. Nice. Yeah. Yep.
Yeah, cut your. If you get a sign of strength there, most likely both those ratios, or the up-down volume and the cumulative advanced decline, most likely will get through that mid-Bollinger Band.
Right.
So I'm assuming, but if you get a sign of strength that big, because this is on a monthly chart and a weekly chart, you're going to see some fireworks going on. And that's what has to happen to get both those up-down volume advanced decline indicators to get above the mid-Bollinger Band. And I think that's what's in front of us. If you notice, we've been in the sell signal since 2021, which is abnormally long. Most of these signals last a couple of years. Well, we had a 4-year downtrend starting 2012, went down for 4 years. Well, we've been going down since 2021 on both of those cumulative advanced declines. So we're due for something other than down.
Right.
So I'm thinking we got time-wise looking pretty good. And so I'm thinking there's going to be a burst of energy. And I think this year, right, I kind of called wolf before and it never really happened.
No, listen, man. You know what the cool thing is that, we broke highs.
We're set up for it.
Yeah, we're set up for it. I mean, when you break highs, there's nothing on the left-hand side now, folks, of the physical gold contract. And in fact, you know what? Hey, check it out too. There was an article. Some of these articles, man, you just can't. there was an article on Bloomberg, and this was yesterday, folks, okay? And they were claiming that the futures have never been that high for the CTAs. The CTAs, folks, are all trend following, advisors. The bottom line is that it had been that high. If you look at another article today, it's something like 500 and something thousand longs, and right now in the futures market, Tim, we're at like 466 or something. 466,000 longs. Yeah, they're piling in, and listen. We know that if you don't know the CTAs, folks, what happens? That's the guy that bought the Boston Red Sox. That's the guy that bought the Celtics. When you get it right, and you follow a trend, man, you get it really right. You know what I mean? So,
right. So
they're giving us a little hand here, Tim. That's for sure.
Yeah. So anyhow, this chart number 5, it gave a bicycle, so we're on a bicycle right now. And if it stays on a bicycle and we get above, on the bottom window there, we get above that line, most likely you'll see the sign of strength. That's all Weisskopf stuff, because you got to have a sign of strength through a resistance area. So I'm thinking that's probably what's going to happen.
And when I'm looking at this, Tim, we're laying right at it, right? Okay, cool.
Yeah,
that's
right.
it. That's
so
how.
we don't need a lot.
No, you don't. I can see what you need. Right.
Yeah.
Okay.
Yeah, but we're still, right. We're right at it. So let's flip to chart 6.
Okay.
And now this chart goes all the way back to 1984. So it really looks at the bigger chart, and the middle window is a monthly XAU gold ratio.
Yeah.
And the bottom window is gold. Now he said, we probably broke out in gold. And so I got a little circle there in blue and the breakout. So I'm thinking gold's already broke out. The gold stocks haven't. But there's a trend. Now go back to the middle window, which is a monthly XAU gold ratio.
Yeah.
And I got a trend line going from the high of 1996.
Okay.
Connecting that high, it looks like about 2006. And I drew it all the way down to where we are right now. And if you notice, the ratio has been trending right below that trend line.
I know.
Can you see that? So,
I can see it, man.
To get through that trend line, you also need a sign of strength.
Right. It's just the opposite of like when you get the Bollinger Band was grabbing the Bollinger Band, you're up, right? This is grabbing it. Yeah, right. Okay.
Right. So to get through that line, you have to have a sign of strength, just like when you break a.
Yes.
So anyhow, this is Weisskopf stuff. So anyhow, you've been hovering against that trend line. You're not breaking it. It's just, since mid-2021, you've just been trotting down to that trend line. We're right at it.
Yep.
We're also at the previous lows. If you draw the trend line from the 2016 low,
right,
you draw that trend line up, we're at the bottom of it. So it's either going to break up or down. Yeah. And with gold breaking up, seems like we're going to break that trend line. Well, if we break the trend line, you should see a sign of strength through this ratio.
Yes.
Well, if the ratio is going up, that means gold stocks are outperforming gold. And so, will that happen? It's at the point.
It will.
Do or die. Either we're going to break up or we're going to break down.
Yeah. Right. And gold is so tricky, folks. It's funny, Tim. I was looking at the gold stocks today. Well, I look at them every day. But just what you said, I was looking. I says, "Okay, man, are you going to give us a beating here or what, man?" Because they're even for gold being down today, these stocks are not. They're down a few pennies, man, but nothing heavy. Do you know what I mean? And the same with the contract. Yeah. The contract's only down $13 right now. It rejected 21.55 this morning. We're 21.67. And we did, we're doing, I think we're doing 200,000 contracts versus we're going into 300,000. Let me see. Yeah, we're still at 1.9 million contracts. Listen, Tim, we appreciate all the great education. You have a great weekend. Have a happy St. Patrick's Day, too, man. And we'll talk to you Tuesday. Okay, man.
All right, thank you.
Thank you.
Love you guys. Right.
Love you, man. Stay right there, folks. Come right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's off 172, Nasdaq's off 60, S&Ps are off 19. What you're going to have here again, folks, is that now you got an expansion of volume in the SPY. Since we've been on the air, you're pushing some volume in the SPY. That being said, what's also happening is that the SPY just rejected lower price also. So this is going to be intriguing watching this whole thing shake out. But we got a big expansion of volume here, man. When I started the show, we were at 50. It's already down 30 million. So that's, you see this pop? That's the big number. And we'll see how much rejection we got. We rejected 511 and you're at 514. So the way that's saying right now, you can have another update tomorrow, man. This is wild, man. See, you're coming into the high with around the same amount of volume, though. That's what's also happening. We go take a look at the Qs. They probably had an expansion of volume also. Yep, they did. There you go. Yeah, watch this. AQR, let's just say. Yeah, see these? Let's see. Well, this is 1,300. I'm going to put the SPY up quick. SPY, equity, AQR, right? No. AQR. What this is going to be big trades. Price volume. So when you want to look at, well, they haven't unloaded a lot lately, though. Yeah, you can see these as 33,000 a time, 31,000, and picture, do that 31,000 times $514. That's a big number, man, no doubt. And if we go over to the dollar, hey, we'll see where this dollar's going to go. It hasn't budged, meaning on the counter trend bounce out here today, price-wise. Oh, look at just a little pop. It's amazing, a small little pop, what it does for the S&P. Because that little pop down on the dollar gave the S&P 14 points up, which is just amazing, actually. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. We'll get him, folks.